All right. Well, I win again, but don't tell Dork and JFresh. Just highlight that real quick. Unfortunately, the head and shoulders on the S&P ended the day right at resistance instead of actually breaking down this morning like it should have. ES kind of just one bear flag after another, holding the 5186 level into close. Some of this might sell off over the weekend. I know a significant chunk of the 5100 puts fell off today. That might open up some Vega risk going into Monday morning. As far as data over the weekend, I don't think we have a lot. Sunday, we have some machinery orders out of Japan. Oh, actually, we have China's industrial production and retail sales. Those are going to be a pretty big deal. Also, their unemployment rate. So actually, big data out of China Sunday night. Depending on how that goes, I know investors weren't very happy with the fact that they didn't cut rates yesterday on the midterm lending facility. So if industrial production, retail sales are down or their unemployment is up, we may see HSI take another big dive Sunday night, and that could once again pressure the top end of the U.S. yield curve as they try to stabilize yuan against further drops. Monday morning, we've got EU CPI and balance of trade. So actually, a lot of stuff going on that's gonna probably affect the dollar into market open Monday. But then intraday Monday, nothing. So we'll be kind of at the mercy of positioning at that point, maybe on a slightly elevated dollar. I know EU inflation is expected to fall, but it probably won't. Shipping costs between Asia and Europe are way the up right now. Broad commodities losing another 10 points today. Still moving up to test the upside of that trend. Dollar just never gained any ground today. Stayed pretty flat. So did yields. Nothing too impressive there. I guess the 10-year held 4.3, which is kind of nice. Correlation on the 1 and 3 month, both continuing up today, but not quite as dramatically as yesterday. We definitely had the bigger move in VIX today, but it got crushed. So, and VIX cash closing up 0.49, VIX 3 month closing up 1.92. Somebody noted that there was a lot of interest in the VIX midterm futures ETF today. It wasn't today, it was Tuesday that it had all the volume, but yeah, there is quite a bit of volume going on there, and then that might be some speculation on long vol over the next, like 3 month period. Especially going, and a lot of it's probably especially going into these two rate decisions from Bank of Japan and the Fed that are both coming up this next week. Bank of Japan on Monday, Fed on Wednesday. Carry trade actually flattened out after Japan's announcement that they're going to move to a neutral to positive rate, but no deleveraging there yet. So I don't think anybody's really ready to make a move until there's a rate decision. We had a couple spikes in the forward yield on vol, but end of day it stayed pretty flat towards where it opened. I don't think move is updated yet. Skew dropped a little bit yesterday. More of the S&P under its 20-day moving average. And a little earlier, we'd actually fallen below negative 40% correlation between cash VIX and VIX futures, but closing the day or closing the week back above 40% at 40.44. Maybe the most bearish thing to happen today is we're now pricing in 63 points of rate cuts for the rest of 2024. So almost halfway, right, between the two. So we're pricing in about 2.5 rate cuts right now. I think the Fed meeting next week is probably likely to change that substantially, but not for now. We're gonna hold probably near there, and then we'll see what the dot plot says. We take a look at the breakdown here. Really, no sectors overperforming. Manufacturing got a little bit of a bump, despite the huge miss in Empire State Manufacturing Index today. Industrial production was up slightly, and that seemed to have benefited producer manufacturing and consumer durables a bit. Finance kind of held its ground okay, but tech broadly down. Tech and retail. Nothing really great there. I think Dow overperformed a little bit. Maybe on the back of like Boeing, Merck, JPM. UNH was up a little. Remember, this is price weighted, not market cap weighted. And then the NASDAQ 100 did pretty poorly today, with the exception of like AMD, Micron, and Texas Instruments. Seems, yeah, down 112 basis points. If we take a look at NQ's a little bit more bearish looking on the chart here than SPX, or ES rather. We've got a bit of a descending triangle here, which we haven't seen a lot of these lately, but that's pretty bearish. Getting very close to retesting that 1800 level, which is probably where this should be. And a breakdown there would be, I think, pretty significant, and a completion of this distribution period, right? Maybe a price target as low as like the 17.6 range, 17.650. Right around there. So we'll see what happens Monday. Obviously, with the charm and positioning and gamma all falling off today, there's going to be a big empty space where all that positioning used to be. And I think overall bullish positioning has weakened substantially with today's expiration. So we have a chance of seeing a continuation post OPEX on this downside move that we've seen over the last 3 days, and possibly a chance to break our uptrend that we have held since, well, since Jan. That would have been the last time that we broke it, right? Yeah, beginning of Jan. So maybe a little runoff there, and probably drop as low as like the 30 EMA, maybe even lower following the FOMC meeting. I will say that if we do drop Monday, we'll probably bounce back in advance of the FOMC meeting. So if we drop Monday, it'd probably be on a lower open, and then I think we grind back up into the rest of the day, unless we lose 50-50, in which case, 5100 and 50-50, in which case then maybe we could keep falling, but that would be positional, so we'll see. Anyway, I'll see you guys Sunday for the member stream. Thank you so much. I hope everybody has a great weekend. Later.